What's going on, guys? It's Marcel Benson, investor and entrepreneur, and I'm here with a jam-packed video for you today, okay? Today, I'm going to be giving you 3 high probability setups. I'm going to show you how to trade them. I'm going to give examples. I'm going to show you where to put your stop loss, and by the end of this video, you'll know how to take advantage of these high probability setups when you see them in the market, all right? But before we dive into the video, you guys know I'm on a mission to get to 1,000 subscribers so I can continue to give you this anti-gatekeeping information, okay? Not holding anything back, letting you guys know everything I know about trading so you too can be a successful trader and make money every day and ultimately, leave that job, get out and do more of what you love, okay? All right, let's get into it. So the first setup I'm going to show you is a bull flag. It's one of my favorites. This one is going to guarantee you profits if you trade it correctly, okay? Now, a lot of people, when they're doing setups, when they're trading certain patterns, they're not really sure how to, enter the pattern. They're not really sure how to take profits. They're not sure where to set the stop loss. Don't worry about any of that. I'm going to get you guys squared away, okay? Now, with this particular stock, I'm going to give an example of Apple in a bull flag. With this bull flag, I'm going to show you exactly how to measure to the target, right? This is one way. There's multiple ways to measure to a target, but I'm going to show you a way that's very high probability, and I'm going to prove that, okay? And then I'm also going to show you how to enter and how to get out, all right? So let's go over here to the chart. Now, as you can see, this is a chart of Apple on the daily. Now, just to get some clarity around what a bull flag is, right? A bull flag is a upward movement, at least 2 to 3 candles green, and then a pullback that makes a lower low that shows a temporary reverse in direction, but then it bottoms out and then goes back up to the upside higher than when it started to pull back, okay? That is a successful bull flag. Now, there's different ways to enter this, and I'm going to get into that, okay? All right, now back to the charts. So as you can see here on Apple, we got 2 consecutive green candles, right? And then we got some downward movement, and then you see it bottom out before reversing and then going up. Now, if you see these 2 trend lines that I drew on the bottom and the top of the pullback, you will see that that is a flag. And typically on a bull flag, the flag is waving downward, representing a pullback, right? When you look at the bull flag, sometimes you'll see a flag, and something can be a flag that consolidates, but a bull flag is typically when the flag is facing down, symbolizing a pullback, right? So it's consolidation within a downward trend temporarily before going back up, okay? So you see that it does just that. And then it breaks out and then it goes up. And you see I have this blue line here, this blue dotted line drawn above the flag. And you may be wondering, like, what is that? Well, that's how you measure the target, right? That's how you measure how far a bull flag can go. So you're like, okay, where did you get this measurement from? Really easy. When you see this upward movement, what you can simply do is take a drawing tool or a trend line and draw a straight line, and then you take that, drag it like I did, and you put it on the outside of the bull flag where it breaks out. That's going to give you the distance that it's going to go. And if you can see here on the chart, that's just about where it went, right? Before reversing. So if you were to enter this play, you would have been able to catch this all the way up to here. But I always recommend, when you know the target, not spending the whole time in that play, right? Maybe going to about 50% of the target, because there's so many different factors that can influence something to not go to its full target in trading, right? So just to be safe, say you have multiple contracts, start taking some contracts off about halfway through that measurement that you did for the bull flag, okay? Now, as far as entries, there's a bunch of different ways you can play a bull flag. The first way is to catch the entry right at the bottom. Once you get a bottom out, right, you get a reversal candle, you can take that very next candle and then just keep a very tight stop loss below that previous candle low. Now, this is going to allow you to maximize what you can make, and it's also going to shorten the distance for you to hit your targets and your goals, right? So you don't have to wait for it to go all the way to the target when you get in at the bottom of the bull flag. You can just let it go to the top of the flag or to highs. So it's a shorter distance to go, and you also get to maximize profits if you do want to stay in longer. Now, if you're a person that's getting, multiple contracts, say you have, I don't know, 5 to 7 contracts, you may want to start peeling them off as it hits each target. So you can set a target at the top of the flag, then you can set a target at the high, and then you can set a target at 50% of what the target is supposed to be once it breaks out. Okay. So that's one way to do it. You can also wait for the confirmation of it breaking out, just getting a candle close outside of the flag. So once it's a candle closure outside the flag, like you see this first green candle here to the right of the bull measurement, to the right of the dotted line going straight up vertically, you'll see that first green candle. That could be an entry for you. And you see after that, there was 1, 2, 3, 4, 5, 6 green candles that came right after that. So you could have also written that up to the target or 50% of it and made quite a bit of profits. Okay. So in that scenario, if you would have waited until the bull flag broke out, then I would just keep a stop loss below the previous candle low inside of that flag. If it would have gone below that, then it was possible that it would go back and retest the bottom of the flag or completely break down. So, the risk to reward trading a bull flag is very high once the targets are known. And I highly recommend trying to understand bull flags, right? When you see a bull flag, take it. It has an inverse, the bear flag, which works the same exact way, but to the downside. So this is something that I use very consistently, especially when I see it on the daily. I get very excited because I know that if I see it on the daily, this is something that's going to play out over the next few weeks. Okay. All right. So this next setup is another setup that I love, right? It's the cup and handle. If you guys have been following me on this page, you saw that I made $22,000 using the cup and handle on this very stock, right? It's Coinbase. It's so funny because Coinbase, it dumps and it scares the living daylights out of people, right? It'll go up and then it'll dump and it'll scare people, but it doesn't really scare the person who understands the nature of this particular stock, right? Coinbase is just moving like crypto. Coinbase is a platform that holds crypto, so it's moving like crypto, right? This is not the action that you're used to seeing in the stock market, but the volatility presents a lot of opportunities, okay? Now let's get into exactly what you need to do when you do see this cup and handle. I'm gonna show you how to trade it, how you should catch the breakouts, how you can place your stop losses, and how to have success using this particular setup. All right, let's get into this chart. So Coinbase, as I mentioned before, made me so much money, right? And the way that I did it was just by catching it on the breakout. So as you can see on this chart, this huge green candle, we call it a Hulk candle, broke out of this handle on the cup and handle, took entry and rode it up to about 350, which is about $100 move, and made I think like 300 or 400%, 300 something percent on that to get the $22,000. Now, that's one way to trade it. You can trade the breakout, or you can trade it from the bottom of the handle if you can identify some sort of reversal there, right? Trading it from the bottom of the handle is a little riskier because it falling out of that handle could mean that it's not actually a cup and handle, right? So, if you're looking at it on the weekly or the daily, you may take entry and then the next day it falls out and you find out that it wasn't even a cup and handle. So I think the confirmation that you want to wait for is it breaking out of the handle. Now, you could guess it at the bottom. You could get lucky, but it's not likely. So you want to catch it as it's breaking out of the handle. That's one entry, and then you can ride it up. Another way to enter is to let it break out and then let it come back and retest. Now, this takes a lot more patience. This takes a lot more time because and it also takes calming that FOMO down, right? Because when it breaks out, it may run and you may see people bragging about it and talking about it online. You may be like, God damn, I could have just took it. But the retest is where the real money is made. So that 22,000 is actually considered nothing compared to what it can do on the retest. And guess what? We're actually retesting on Coinbase right now. Now, this is not financial advice, but I know a little something about Coinbase, right? It's super volatile, but when Bitcoin is ready to go, you can pack your bags and take Coinbase with you, all right? Now, it's retesting the handle. So this could be a very good opportunity to start taking, average downs into the 190 area, right? It may have already done it. It came close to it today. So it may, by the time this video comes out, it may already be out of here, but we'll see how that goes. Now, if you take it on the retest, then you would just keep your stop loss just below the handle. Now, if you get a candle closure inside of the handle, then it could be invalidated and not ready to bounce, but actually, fall down because of whatever economic reasons, right? So that's the cup and handle. If you see it, take it, right? If you see it and you can make sure that you abide by those rules that I just gave you, take it. It's going to make you a lot more money, okay? Now let's get into the next setup. Okay, and last but certainly not least, this is a very high probability setup. It's called the head and shoulders, right? The head and shoulders. And it looks just like that, right? You have a head and then you have two shoulders, right? So the stock makes a move and forms a shoulder. Then it shoots up, it then shoots back down, and then shoots up again to form the other shoulder. Now, with this particular setup, this is a bearish setup. When you see this, we are looking to take puts, okay? Now, let's get into the chart. Now, I have Walt Disney pulled up, and as you can see, I have 3 arcs drawn, right? The first right here on the left shoulder, then the head, and then the other shoulder. Now, there's something that's called the neckline, and sometimes that neckline can be slanted, right? As you can see, I'm actually going to, sometimes that neckline can be slanted. Now, whether the neckline is slanted or straight actually does matter, right? If the neckline is slanted, that's just saying that the head and shoulders has the probability of going further down. Now, once the shoulder is in, it typically means that there's some sort of drop coming. We don't know exactly when. A good rule of thumb is to take it once the shoulder has been breached. In this particular case, it gapped down, so you never had the chance to actually do that. But you could have taken next entry and still made quite a bit of money with the, downward plays that took place afterwards. So the way that you want to trade the head and shoulder is to wait for it to break the neckline, right? That's the point in which both of the shoulders formed its bottom. So you let that break and then you take entry after that, right? Another way is to, just like the cup and handle or just like the bull flag, wait for a retest. A retest is something that's pretty much present in every pattern, right? The move is going to be made, right? The stock is going to make its move, and then it's going to give it the opportunity to come back and really test to see if it wants to go in that direction. So in this case, it breaks below the neckline, and then it can come back and retest, and then you can take that retest, if you can find a reversal candle, back to the downside for it to go further, right? It doesn't always happen like that, but it is a high probability way to make money if you miss that first breakout, okay? And you just keep the stop loss simply right above that neckline so that you're not losing a whole lot of money if it does go against you, okay? Really simple. If you have any questions about any of the patterns that I just talked about, put them in the comments. Like, my goal here is to get you guys to superior trading status, right? Not holding anything back, teaching you guys everything I know about trading. Now, if there's more that you want to learn, or you need a little bit more assistance, or you want to be in a community of like-minded people, just click the link in the description and you can join the Prosperity Collective, where we trade every single day and get our members money, right? Here's one example right here. Here's another example right here. Every single day, our members, right, our really family, I'm not going to lie, we be in there having so much fun, just laughing, talking about everything, but also getting the job done, also being very sniper-like and getting the job done, making money, and, just getting to know each other, right? A lot of times, like, us people that are trying to make a difference in the world or trying to go out and do something different, it can be lonely. You may not have, like, that immediate family right there next to you. And I'm telling you, look, we made this thing very affordable, and we poured our heart and soul into it because we want you to feel seen and able and supported, right? Exactly the things that I wish that I had, exactly the things that my boy Zay wished that he had before we started this journey. So now we're providing it to you, and we get just as much out of it as you do. I'm not going to lie, like, hearing y'all feedback, hearing the testimonials, is nothing but like I can't even put it in words. So if you need something like that, if you want to be a part of something like that, just again hit the subscription in the I'm sorry, hit the link in the description below, and I'll see you guys on the other side. Okay, peace.